Hello everyone. So today we'll be continuing our topic on liquidity. Now, liquidity sweeping is something that you need to master. And when you master it, it helps you to see the big picture that the market is trying to drive to. Now, let's assume we have a market like this that have something like this and then price begin to trend upward, right? You call this an uptrend. Now, while we call this an uptrend, do not forget that the market has left liquidity around the zone. All right. So we already have a low here where the market engineered intentionally for retail traders to place their stop loss. All right. So when the market is trending higher, all of a sudden the market begin to change trend. All right. And then you see the market trending downward. And sometimes it can do something like this, a break of market structure, and then come back again. Now, if you trade from an institutional point of view, your eyes will be at this level. All right? Your eyes will be at this level, knowing that price is coming because the market moved from liquidity to liquidity. Every move in the market is engineered by liquidity. So you know that this market is likely going to come down, sweep liquidity from this zone, then move higher. All right. So all what was happening in between here was price trying to manipulate traders to enter, lose money, enter, make money, lose money, make money, lose money. But the ultimate goal of price was to come to this zone, sweep liquidity, which we engineer it for a higher movement. All right, because liquidity is the fuel that helps price to move. Now, we'll be looking at this chart based on this understanding. When you come to the BTC USDT chart today, you will see that in the last video on liquidity, I explained to you what a liquidity sweep means. That when this candle swept the high of the previous day, it took liquidity. So we'll be targeting that for the short term, we'll be targeting this low. All right, the price is going to take, so this low can be our target for this trade. That is yesterday. Now today, after this have been achieved, we'll be looking at the big picture that after this liquidity sweep, where is price actually heading to? And it is obvious, the big picture is very obvious here, because we have this low that have not been traded into before that is lying there. So a lot of stop loss will be under this candle. For those people who are expecting Bitcoin to go to 100K, they may put their stop loss here. And so if there are a lot of orders hanging below this candle, the market have engineered itself in such a way that it came down and grabbed this liquidity. Now, if you enter the trade here targeting this low, you might have exited the market because you really didn't see the big picture. But if you saw the big picture, you could have held on to that trade based on market order flow and the market structure, knowing that this low is the ultimate where price is actually heading into. You can see that happen here. So when these have already been achieved, is there still a trading opportunity within this candle after this low have been broken? So we come to the hourly time frame, the 1 hour time frame. Now on the 1 hour time frame, based on everything we've explained here, we see that around what time here? Around 2 a.m., right? This is 2 a.m. Around 2 a.m., that liquidity objective was achieved. All right. So now that we know that the objective have been achieved, what do? So once price have swept liquidity, the next thing price we want to do is to grab internal liquidity. Because it has grabbed this external liquidity, it will now begin to engineer to grab internal liquidity. So when this happened around 2 a.m., majority of us will be sleeping around that time. So when we open our chart around 6 a.m. and see that this have been achieved, we can now say, okay, what is the structure? Okay, we have to look at the market structure and say, okay, the next liquidity after this have been achieved will be that market want to grab liquidity around this double top, what we call double top. All right, so we mark out that area. That is, we're not seeing that this has happened. So we come down to our 15 minutes. When we come down to our 15 minutes, we want to use our knowledge of market structure, right? We want to use our market structure knowledge to see how we can trade this. So we say, okay, around that time liquidity was grabbed. This is the last high that was created. So if this high is created, this is our low, right? This is our low. And this is our high. All right, this is our low and this is our high. So if price break down this area, then there is likely not going to be a reversal. But here we can see that around what time? 3:30 p.m. West African time. Around 3:30 p.m. West African time, the market structure was broken. It shifted bullish. All right, so it shifted from a bearish order flow and now it is now bullish. So now that it flipped bullish, you need to begin to come to the 5 minutes to look at how you can enter that trade and take this opportunity that it presents itself before you. So if you come to the 5 minute time frame, you can see what happened here. Then immediately that happened, you can see the buy volume that came into the market, confirming to you that the market wants to hunt for some liquidity inside that trade that day. So you see that after this happened, this is our break of structure happening here. Let me make it what color? Let me make it yellow. So we see that after this was achieved, we can now say, okay, we can enter from the next candle, putting our stop loss around this zone and targeting this high. All right, this is our high. We wouldn't have seen it go any higher than that. This is our internal liquidity. So we can say that we can conveniently say, okay, this is our take profit. All right, and below this candle is our stop loss. And this is a 3-to-1 risk to reward, reward to risk 1 to 3. For every $1 you're making $3. So this is a very good opportunity that you would have been able to take if you understand this concept very much. So this is another video on liquidity sweep, guys. Look around your chart. If you see this happen, check it out, break it down. So the last 5 minutes to see how you would have traded it. And this is more of something that is usual, is constant. If this happen, if all these conditions are met, the market will begin to sweep internal liquidity. So this is just what I want to make in this video. I just want you to add it to the previous liquidity video knowledge that I created for you. So when you combine both of them, you have something powerful that you can use in your future trading. All right, guys, so this is what we'll have for you today. So I'll be seeing you in the next video. Thank you very much. Enjoy your day.